Welcome to Drill Down Earnings. We have quarterly results from Zscaler. This is the business story behind one stock in a move. I'm Cory Johnson, Chief Market Strategist for the Epistrophy Capital Research. First quarter 2025 earnings for this company. The stock is moving, not in a good way. Wall Street likes a beat or a miss. And yeah, there's a beat. It's a pretty good quarter. So what did Wall Street not like? Let's take a deeper look here. $628 million in revenue, 77% in adjusted profits. Yeah, because there are no real profits. So that's the deal with this company. It's adjusted profits, and a fairly relative, recently IPO'd company going back only a few years here. But growth still zipping along here, 26% revenue growth on a year-over-year basis. Not what it was a few years ago, but still growing really fast and steadily improving margins. They have it probably within their capability to turn a profit, but they want to kind of hold that line and continue to grow this business because there's a lot of growth to be had here. Indeed, they talked about this kind of amazing number in their press release and their conference call where they did 500 billion daily transactions. What is 500 billion? I mean, I know that what it is, but it's a hard number to imagine. It's 60 times more Google searches than there are in a day. So what's a transaction to them? It's when a customer loads a web page or downloads a file or accesses a cloud application or has an API that makes a call through a network. Those cloud security incidents, those transactions are happening on an incredible basis at Zscaler. Again, 500 billion every day. But what we saw in terms of them signing new deals and growing customers, yes, they are growing. Yes, revenues are growing at a 26% pace, but their deferred revenues, they like to use a phrase called calculated billings, which is total revenue change plus the change in deferred revenue. It's a non-GAAP number, but it kind of tells how big the business is and how big the coming business is on top of that. And those calculated billings, those deferred revenues on top of billings, those are not growing as fast as the actual revenues themselves. The gap between the growth in calculated billings, which is just 13%, to the growth in revenues of 26%, shows maybe nervousness on the part of their customers. Another way to look at this is book-to-bill. Their book-to-bill dipping into negative numbers, and indeed was down 10%. This quarter is always kind of weak in terms of book-to-bill for this business, but it was down 10% over last year's book-to-bill. Not great for Zscaler. So how did the stock react? Well, it sold off a little bit, down 5%. Like I said, the quarter was good. The indications of the future may be less good. Stock down 5% in after hours. Well, that wipes out the entire year's gain, which was only 5%. Now, they talked about some changes internally, and they suggested that changes in their sales operation, changes in the chief operating officer, a new chief product officer announced, Adam Geller joining as a new chief product officer, that all these things meant some attrition within the company, voluntary and involuntary attrition, which is a little bit of a speed bump in terms of sales growth. A lot of questions on the conference call for this, but CEO Jay Chaudhry, a friend of the show, he's been on the Drill Down podcast many times, Jay Chaudhry talking about the opportunities that they see ahead of them, even if there's some sort of shuffling of the sales staff, and key among them, shocker, AI.
Q1 was very strong. There are three factors that I believe will keep on helping us the second half. One, we're seeing strong demand for Zscaler platform, including solid signs of interest for AI security offerings we have. That wasn't there before. Two, we have a strong and growing pipeline. Three, our ramped sales capacity has strengthened as we had lower sales attritions in Q1. So I feel very good about our guidance for the second half.
So Zscaler's Q1 2026 earnings, here's your essential summary, the things you want to remember here. So $628 million in revenues, really strong 26% year-over-year growth, damn near profitable for this business. But I think the one number that tells us a whole lot, the drill down earnings bite, we'll call it, 0.8 times, billings were 0.8 times their actual bookings and revenue. And whenever book-to-bill is negative, that's a bad thing for a company because it means that they don't have the surety that revenues will continue to grow as they have in the past. They may well do so, and the company is guided for that, but book-to-bill not as strong as it has been in recent quarters. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.